Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within company filings. Get ready for a deep dive into Fidelity Salem. Street Trust's latest SEC report, a document packed with more numbers than a calculator convention. So what are we looking at today? It is a snapshot of how some of Fidelity's bond fund, are doing, specifically their performance and what they've been invested in. We'll be cutting through the jargon to tell you what these numbers actually mean for your money and for the company before we dive in if you love getting no-nonsense insights from corporate finance documents. Make sure you hit that subscribe button and the notification bell. We also have a fantastic community over on Discord where we break down these filings together. And I hang out to answer your questions. Link is in the description below. This is a certified shareholder report for Fidelity Salem Street Trust, and it covers several different funds under that umbrella. We're going to focus on the financial health and investment strategies presented here. It is like getting a progress report card for these investment funds. The report gives us a look at the period ending the 31st of August 2025. This is a crucial update showing us how these funds performed over the last 6 months or so. We're going to look at a few specific funds here, like the Fidelity Short-Term Treasury Bond Index Fund and the Fidelity Series Long-Term Treasury Bond Index Fund. They all focus on US Treasury bonds, but they have slightly different investment horizons. Let's talk about cost, because who doesn't want to know where their money is going for a hypothetical $10,000 investment in the Fidelity Short-Term Treasury Bond Index Fund? The costs were just about $2. That translates to a tiny 0.03%. This is super low, and it is a good sign for investors because more of their money is working for them instead of paying fees. Now, let's look at the overall size of these funds. The Fidelity Series Long-Term Treasury Bond Index Fund is massive with over $22 billion in assets. That tells you a lot of people trust this fund with their investments compared to the Fidelity Short-Term Treasury Bond Index Fund, which is around $32 billion, but still substantial. When we look at what these funds invest in, the story is pretty clear. They are heavily invested in US Treasury obligations, which make up about 993% of their net assets. This means they are focused on government debt, which is generally considered a safer investment. This high percentage in US Treasury obligations is the core strategy for these funds. They are aiming to track the performance of Treasury bonds, which are known for their stability. The top holdings are overwhelmingly US Treasury notes and US Treasury bonds. This confirms their strategy of sticking to government debt securities. Now let's zoom into one of the larger funds, the Fidelity Series Long-Term Treasury Bond Index Fund. As of the 31st of August 2025, its size was a whopping $22 billion. That is a huge amount of capital under management. The portfolio turnover for this fund was 10%. This is quite low, which suggests a buy and hold strategy where they are not actively trading in and out of positions frequently. This aligns with an index fund approach. Moving into the financial statements for the Fidelity Series Long-Term Treasury Bond Index Fund, we see some key numbers. The total investment in securities is over $221 billion. This is the value of all the bonds and other investments the fund holds. Looking at the statement of assets and liabilities, we see the net assets are nearly $221 billion. This figure represents the total value of the fund after accounting for all its assets and liabilities. The net asset value per S-share is listed at $5.31. This is the price you would pay for one share of the fund. The statement of operations shows us the income and expenses for the 6 months ended the 31st of August 2025. Interest income was over $439 million. That is a lot of interest from those treasury bonds. The fund's expenses were quite low at under $100,000, which again points to those low management fees. This is an interesting part. The fund had a net realized loss of over $384 million on its investments. This isn't necessarily a bad thing in bond funds, especially if interest rates changed, but it is a significant number to note. Similarly, there was a large change in unrealized appreciation or depreciation of over $648 million. This reflects the change in value of bonds still held by the fund, which is very common in bond markets. Looking at the statement of changes in net assets, we can see how the fund's value grew or shrank over the 6 months. Total shareholders saw a net increase in assets of over $1049 million. This is despite the realized and unrealized losses, thanks to a lot of money coming in from sales of shares. The financial highlights provide a per share breakdown. The total return for this period was negative 298%, which aligns with those realized and unrealized losses discussed earlier. The notes to financial statements explain the organization's and accounting policies. The fund is structured as a Massachusetts business trust and adheres to generally accepted accounting principles in the US. The investment valuation section tells us how the fund values its assets. Most of the investments, around $219 billion, are categorized as level 2 in the valuation hierarchy. This means their value is based on observable inputs like quoted prices for similar investments or interest rates. Now, let's switch gears and look at the Fidelity SI-US Treasury Bond Index Fund. This fund is a bit different because it is offered exclusively to certain clients of Fidelity or its affiliates, not the general public. With a fund size of nearly $9 billion, it is still a significant player. The portfolio turnover is 28%, which is moderate. The net assets here are close to $9 billion, and the net asset value per S-Hair is $8.87. Interest income for this fund was over $159 million. Expenses were very low, with management fees and other operational costs totaling just over $1,348,000 after reductions. This fund also saw net realized losses on investment securities totaling over $79 million. The change in unrealized appreciation or depreciation was positive over $72 million. Overall, for the 6 months, the fund saw an increase in net assets from operations of over $152 million. The total return for this period was 175%, which is a solid gain. Let's touch on the Fidelity Short-Term Treasury Bond Index Fund. This one has a fund size of over $32 billion. That is a lot of money, and it tells you it is a popular choice for those looking for shorter-term treasury exposure. The portfolio turnover here is a rather high 82%. This suggests a more active trading strategy compared to the longer-term funds, possibly to manage short-term fluctuations or rebalance more frequently. The net assets for this fund are over $32 billion, and the net asset value per S-Hair is $10.41. Interest income was $599 million, and expenses were surprisingly low at under $480,000 after reductions. This super low expense ratio is a major selling point for index funds like this. This fund did experience a net realized loss of about $328 million, but it was offset by about $31 million in unrealized appreciation, leading to a net gain on operations. The total return for this period was 285%, which is a good performance. The key takeaway from these Fidelity Bond Index funds is their extremely low cost structure and their unwavering focus on US Treasury obligations. This suggests a conservative investment strategy aimed at providing stable returns with minimal fees. Now, for my take on these numbers, Fidelity continues to dominate the index fund space, providing low-cost and accessible options for investors. The focus on treasuries means these funds are likely seen as safe havens, especially in uncertain economic times. A strength here is the sheer scale and trust these funds command, leading to economies of scale that keep costs down. However, the recent realized and unrealized losses noted in some of the funds, particularly the longer-term ones, are worth keeping an eye on. While expected in bond markets, given their sensitivity to interest rates, large swings can impact investor confidence. The fact that these are index funds means their performance will largely mirror the treasury bond market itself. The opportunities are clear for investors looking for stability and low fees. The direction for these funds seems to be continued dominance in the passive investment space. The risks are primarily tied to broader market movements for treasury bonds, such as interest rate hikes, which can devalue existing bond holdings. In conclusion, Fidelity is executing its strategy effectively, offering solid low-cost options in the treasury. As Euro bond space, investors in these funds can expect returns closely tied to the treasury market with minimal drag from fees. The main thing to watch is how interest rate changes might affect the value of these bond portfolios. What do you think about these Fidelity Fund reports? Did you find any numbers particularly interesting? Let me know in the comments below if this deep dive helped clarify things for you. Give this video a thumbs up and subscribe for more decoding corporate filings like this. If you want to join the conversation and get even more exclusive insights, check out our Discord server, link is in the description. Thanks for watching, and I'll see you in the next video.